Good morning, everyone, and welcome to the morning show with RoD and very, very special guests. I actually have three additional guests. I know you can only see three pictures, but I have two at one location. First off, first guest being MCheese from the Discord, SB from the Discord, and not visible, Coffae from the Discord. So I just want to say, just welcome them into the channel, welcome them into the discussion, and thank them for joining us this morning. They are the options pros in the Discord. They are what makes that options trading channel go around. So without further ado, I'll let them introduce themselves. I'll start with MCheese, since technically he agreed to do this first. MCheese, would you like to give maybe a brief introduction of how you got involved with options and how you ended up in such a degenerate Discord?
Well, first of all, thanks, RoD, for having me on. I appreciate it. Yeah, I've been in options for probably about 11 years or so. Not really sure how I ended up in RoD's Discord. I think I started out in another Discord for crypto. And I believe some other people in there got me kind of looking at your Discord. So that's kind of how I showed up over there, and I noticed you had an options channel, so that's my kind of forte. I started out with Tasty Trade. That's my platform of choice, and I used that one probably since 2016, I think, is when they started that brokerage. But they had another platform, I believe, before that. Used mostly Thinkorswim, which I know you're familiar with, and so yeah, I've just been going at it for about 11 years now. Learned a lot, and still learn every day from everybody in the Discord, and hopefully they learn from me and just kind of share each other's experience.
Awesome. Thank you for that. And SB, if you want to give a brief intro, and then, of course, introduce who you're with.
Yeah, good morning, everyone. Good to see everybody bright and early this morning. It is now 5:03 where we are this morning, so up early. And Adam, my length of time of trading options is not as long as Cheese, and I was investing, mostly buy and hold, and then I moved over to some dividend producing stocks, and really sort of enjoyed that and saw a future income stream from that. I'm 54, and so that probably moved in that direction 4 or 5 years ago. I was in some multi-limited partnerships, MLPs, and the gas industry, and it was producing some nice dividends and some others. And then somehow I stumbled on your channel, RoD. I don't really know how I stumbled on it, but I did. YouTube, and I'm always in YouTube and other places trying to learn and consuming information and researching and taking various people's points of view and perspectives and trying to build my own knowledge base as much as I can. And it doesn't mean I agree with everybody all the time, but I do take in as much as I can and listen to different points of view. And then really when you started going deep into how YieldMax works, and early on in YieldMax, I went sort of heavy in that. Well, I guess heavy to many. I guess I probably had 125K in there at one time, and just following along daily was interesting, and then seeing really the back of the house, so to speak, of how YieldMax was moving these options around, and this led me to consuming more information about options in general, and really started seeing what all options could do, and picking up information from Max Convexity and several others, and then started to build out my own trading style really over the last 2 or 3 years, I would say, and seeing options as the tools that it is. So I use Thinkorswim, Schwab, various other ways to research and follow along with a lot of what Cheese says and does. I think he's brilliant. RoD, I want to say this at the beginning also, really proud of you, man. You've come a long way. We're in this journey together, but I think the distance you've traveled in just the last, 6 weeks to 2 months has been tremendous, in a sense of you getting to chart your own course and you really diving deep into how do you want to use these tools financially for your best interest. So proud of that, man. It's good stuff. And I enjoy being in the Discord because learning from everyone in there, the things they're researching, the plays they're making, things like that. So, and my young, beautiful, smart daughter is here with me, and I'll let her jump in.
All right. Hi, I'm Coffae. Got into options originally because of this guy right here, calling me, telling me about it, showing what a good return he's making, and really caught the bug. I graduated college not too long ago, and that came about at a time where I had work, but it wasn't the same level of study and discipline as school. And then I got my CPA shortly after. And so I also had the background in accounting and finance. So that gave me the propensity and interest in making charts and studying and making spreadsheets to track, and really just snowballed from there.
Awesome. And thank you all for the intro. SB, your check's in the mail, but I appreciate the compliment, right? So let's start with like a basic question, right? Because a lot of people, I don't want to say avoid options, but they're probably intimidated with options. So for anyone that may be listening to this and that is maybe afraid of learning options, or they just don't know where to start, and don't say my channel or else I'm removing you, but what is the first place that you would recommend they go to start learning?
You mean like resources online?
Yeah, exactly. A YouTube channel, a book, a website, or just trading, right? I don't know. Like, what would you tell someone?
Well, obviously, I'm biased. I would say Tasty Live is a great resource, and I know it's been mentioned before many times on your channel. I know Max listens to them quite a bit, but that's how I got started. Is basically
when you say Tasty Live, you're talking about their YouTube channel.
Right, correct. Okay. Yeah, Tasty Trade is the platform, trading platform. Tasty Live is their, I guess, not news network, but their live show that they do in the mornings and pretty much all day long, I believe. But yeah, they have many resources. Lots of short form content, long form content. But yeah, I would definitely start there. As far as books go, I like a lot of Alan Ellman's material. He also has a website, Blue Collar Investor. That's one good resource if you want to learn some basic things about, covered calls, puts, a lot of things that we talk about. And and just reading a lot, as much as you can. Just looking at different YouTube channels. Invest with Henry is a lot of good resources. What about you, SB?
I think that first off, I would say to everyone, there's really nothing to be afraid of. It's not scary. What it really is if you're interested in these high yield funds and what they do, you're involved in options. That's what they all do. That is the underlying activity that produces the return that you're getting. And then they're just taking a nice slice off the top of the pie of your money. And if you are willing to spend a little time and learn, you can do this. You don't have to take great risk. You can do things very conservatively or larger, but you can do it, and you can chart your own course. You can define your own destiny. And so that would be my encouragement to all of you guys. And you can ease into it. You don't have to jump in the deep end to start with. And just like RoD has shown in his charting, you can go one step at a time until you're producing really a nice return at the comfort level that you're at. As far as resources, I mean, I use YouTube for a lot. I use YouTube when I can't figure out how to try to fix some small thing on a car that I should know how to do, or replacing an air filter, a cabin air filter or something like that. Well, in the same way, you can go across YouTube and you can find various YouTube producers out there that are comfortable to you, and you don't have to jump way in the deep end. But I view Tom King often. Mark Yagi is someone that I've listened to, and they're usually fairly advanced, I would say. I think Cheese, you'd probably agree.
I agree.
With that.
Yeah, I definitely like those two guys.
but you don't have to start with him and go all in. You can find somebody that's very basic and ease into it, or you can go back into some of their history and find the basics. And if if you'd rather hear from someone, different than that, like if you're a lady and you want some others, there's Abundantly Erica, there's Trading with Ashley. My sister, I know, who I've taught options to now, is doing really well, follows those two, and it's just a little more comfort level for them. I think Coffae here watches Abundantly Erica a good bit. So anyway, there's a lot of resources out there. You just, you got to be willing to open your mind and to take it on, and you can learn it. I promise you can. It's not that complicated at the end of the day.
Okay, now that we got the opinion of I'll say the older people in the house, right? Let's get the opinion of the young blood. So for the younger people listening, maybe a more fresh outlook. So what do you think, Coffae? What would you tell your friends who are interested in options trading? Where would you send them?
I would say start off initially on YouTube. Just learn what a call, what a put is, and then what really made it click for me, RoD, actually was watching your options wheel series. That really helps, the way you broke it down on the spreadsheets, the way I could see how not just what a call, what a put was, which I did have to learn that briefly in school, but I didn't really understand it, but how it can work in a way to generate premium and income. And then I'd say I very quickly had to put my money where my mouth was, because a lot of these things are the inverse of each other, and you've got to kind of go back and forth in your head to think through, okay, what is this again? How does this work? And for it to really click for me, I had to start actually buying and selling. So I would say, start on YouTube, get the first level of basics, and then actually start trading from there and build on it as you go.
So did you say you learned options in school a little bit? They taught you options?
Very briefly. I'm a CPA, and I've got a minor in finance. So a part of that curriculum was I had to know what they were, and roughly, okay, is it going to be a liability or an asset, and so on, but not nearly to the level we're learning here. It was just very basic. What is a buy, or what is a put? What is a call?
Wow. Even that, though, I'm surprised. I wonder how outdated, though, the education on that was.
Yeah.
Pretty current or not. But all right. No, yeah, appreciate that. And then I'm going to do just a real quick question for all three of you. Best options platform. Go, ladies first.
Well, I also got into this through SB, and so he was on Schwab, so I tried out Schwab. I like their charting. I like the Thinkorswim web version a lot.
So when you say Schwab, though, do you mean TD Ameritrade because they had Thinkorswim, or do you actually
Got in and they had already bought TD Ameritrade?
Yeah, whenever I only started doing this after the merger.
Oh,
so
okay.
It was always Schwab for me. I tried out Tasty Trade a little bit, and I like the platform. I think I'm biased because I came from Schwab, and so that was what was most familiar to me. And then I think all platforms have to make money, and I think that the way Schwab pulls was a little bit favored how I traded more, because I like to move a lot in and out of positions and in and out of tickers, and so yeah, I'm on Schwab.
SB, are you? I assume you're going to say Schwab as well.
Yeah, I do, and I spend most of my time in Schwab because it's simple for me, and I do know and have accepted that platform is going away in the future. I actually have a one-on-one with a Thinkorswim rep coming up here pretty soon to get deeper in the desktop. My brain is definitely not as big as Cheese. It's older and it's gotten a little more mushy. And
Well, look at the size of his head on the logo. So.
I know, look, his head's so big.
Yeah.
And so when I've gone into Thinkorswim desktop, you know, I have felt intimidated even as much as I think I'm on track to do about 7,400 options this year, buying and selling. And even at that level, when I look at that platform, it just makes me cringe a little bit. So I'd want to get it set up where it's simpler. But I do use Thinkorswim Web quite a bit for research. You know, I go in and I study some charts there, and you know, RSI and MACD and moving averages and Bollinger Bands and all those. I do use it for that. So it's set up for that, and I just go back and forth.
Awesome.
Yeah, it can look a lot like flying a plane on the desktop version. I actually use that for my charting, Thinkorswim. But yeah, I started out with when they were TD Ameritrade is when I first had an account. So, but I just had buy and hold basically through there. I didn't really do any options trading. So I couldn't really speak much on the options part other than I did do some paper trading because I do like their paper trade platform. So I don't know if you guys have ever used that one.
Same cheese. I started off with TD as well, way back when.
Yeah, so I've been with TD, you know, for probably, I don't know, 6, 7, 8 years before they merged over with Schwab. I guess it's probably been at least 5 years since that happened. But yeah, of course, my platform I've used, like I said earlier, was Tasty Trade. You know, back when they first started their brokerage, I believe it was 2016 or 17. And so I've been with them since then and just gotten used to it. I do like all their roll features that they have. You know, when you roll options, they're just super easy to do that. And yeah, it's just a pretty light platform. It's not too, I guess, code heavy, if you want to call it. So it's pretty fast, seems like, and order execution is pretty good from my experience.
So is it Tasty or Thinkorswim?
I mean, it's personal preference. I don't know. That's a good question. Some people will say IBKR, but I've heard it's really buggy, I guess, from what I've read, as far as options trading anyway.
All right, first community question. What are the Greeks and which one is most important to you when picking your options? So when it comes to the Greeks, I always said in the beginning, you know, it's annoying, right? People talk saying the Greeks and like just enough, right? But in reality, they are a useful tool, right? MCheese has kind of taught me that.
I think I got every Greeks in your chat, in your Discord.
If you had to pick one or two though, like, because obviously there's a bunch of them, some of them are useless, right? But which one, what are they, number one? And number two, which ones do you use or do you think are useful?
Yeah, I mean, really, Delta and Theta is the two main ones that you probably want to know. Yeah. And you can get in the weeds and go with Vega. You don't need to really know anything about RoD, any of the second derivatives of options. You know, there's a bunch of other things like VAMA and color and things I don't really get into, but I kind of basically know what they are, but really Delta and Theta. Delta just tells you, you know, that is a directional the aspect of the option play. So if you have negative Delta, that means you have a negative direction bias. Positive Delta is positive. And you'll hear a lot of people say, you know, if you sell a 20 Delta option, you have about a 20% chance of the stock expiring in the money. So they use it as a probability thing as well.
How true is that though, right? Because a lot of people use that as the definition, even though it's not really the accurate definition. But would you say using the probability like definition is somewhat accurate or?
Yeah, I mean, from studies, you know, done by Tasty Trade, it seems like it's fairly accurate actually. You know, especially the farther out in time you go. You know, a lot of times I know a lot of people like to sell the shorter term options, you know, like weeklies and biweeklies. So that can really change quickly. You know, if you know anything about gamma, that's the rate of change of delta. So the shorter in time
the delta of the delta.
The delta of the delta, exactly. So yeah, the shorter in time you go, the faster that delta can change. So, you know, you might be sitting at a 20 delta when you put it on, then you have a 3 or 4 or 5% move in a stock, and then that can change to 40 delta pretty fast. But if you go out, you know, 45, 60 days, something like that, then the delta changes a lot slower because you have less gamma at that point. So
Awesome.
Hope that answered some of your questions. And then theta obviously is, the time decay that you have in the option. So that's what us as option sellers like. We like to have time working for us versus if you buy options, you have time working against you. So, it's very important.
I agree with what Cheese said, and I'm a little inverse of that in that I'm heavy theta, and like you said, that's what pays the premium, if you will. And so I look at theta probably first because a lot of my trades are either at the money or in the money on the call side. And so looking to maximize theta. And if I'm feeling a little uncertain about a play, I'll even go a little bit further in the money for that downside protection. Certainly when I'm starting a trade. Nothing helps a lot when your trade like ELF goes from 125 to 75. That's just disaster. But something that drops, a marginal amount, that helps. And then delta would come really a lot for me on the backside if I find myself underwater and trying to avoid a whiplash effect or whipsaw effect would be finding a delta out and just checking those about where I'd want to go, even in using a diagonal recovery strategy. Would be looking at delta and time there. And then sometimes on some of these plays, not often, but some of them do for me work bi-weekly and or monthly, even possibly even 6 weeks or more, if that's the best combination at that time. So that's kind of what I do. And then of course, Rod, as you've talked about, and Cheese, I know you do this as well, and you've talked about quite a bit in the Discord, is you're monitoring theta really throughout the week to find the sweet spot to close that trade and get out with as much in your pocket as you can.
Yeah. As far as the theta goes, I like to start a lot of mine out further in time, like 45, 60 days, even up to 90 days. A lot of times if I'll do maybe something like a strangle type strategy where you sell a call and a put at the same time and just play for the range. But a lot of times, I'll hold the option for, roughly half the time. So if you start out at a 45, DTE, a lot of times you'll let it go to about 21 days or so. So that's about 3 weeks left, which is half the time. So, and just by doing that, it smooths out your time decay curve. And plus the last, 2 to 3 weeks of an options life, that's when you get that gamma risk that I was talking about earlier, where the delta can swing around and a lot of your metrics kind of can get off in those last 2 weeks. And you start to get more directional too. So the further out in time you go, the more you rely on time to make you money versus direction.
I think along my journey, I've used the Greeks to different levels. Right now, I'd say they're more auxiliary. I like to keep an eye on what my theta is in my account, just looking at my positions page, but it's not something I analyze whenever I'm creating a trade. I'll also look at delta if a stock has fallen and I'm trying to decide, okay, do I want to sell a position lower than the strike of my trade? But I wouldn't say, I haven't been using it really to analyze and set up and actively trade with it.
Did they teach the Greeks in school?
No.
No.
Not
Okay.
at all.
So they're not that important, I guess, right?
Not really.
Interesting seeing how it plays out with doing these synthetic with a collar, and if a ticker is moving a good bit, how is that playing out with the collar there? And so gamma's been more on my mind lately of trying to wrap my head around it.
Yeah. Speaking of the collar, I want to talk about RoD a little bit, right? Because I've mentioned it during the when I talk about it on the channel. Really, SB has been the one telling me, I don't know, maybe for 2 years or so, or maybe a year, I don't know.
You're stubborn, Rod.
Yeah, to start to do my own YieldMax essentially in a way, right? So, who thought of, or who was the first to on SB, this on your side, you or your daughter, to attempt the YieldMax strategy, we'll call it, and how'd that come about? Did you always have? Was this because basically looking at what YieldMax does, you wanted to give it a try, or were you already doing this and you kind of thought of it on your own, essentially? Especially, I love the put part, by the way, but where did RoD come from?
Yeah, I learned it from Coffae, right?
No.
No, I didn't. RoD, as again, consuming as much information as I can. Certainly saw how YieldMax works, and I started rolling with that. The whole setup, and then viewing Mark Yagi, and then Tom King, and just listening to what they're doing, how they're charting, how they're making their plays. And Mark is a big in the money guy. He's collecting theta. He's a poor man cover call setup guy. He tries to buy the call at about a 90 delta. And so just looking at that, and then Tom King's a little bit different. He's 80, maybe 70 sometimes on that. But I started to hear quite a bit, the last couple months, like we all have, 2 or 3, 4 or 5 months ago, that the market's getting toppy, and that a lot of the AI plays and NASDAQ in general might be overvalued. And so there could be a bubble on the horizon. So I just started thinking about, how could I get some protection? How could I create a situation where we have a floor, right? And I really just started looking for that and playing around. And I talked to Max Convexity about various things and bounced things off him as well. And then I was watching one of the Tom King series, one of his shows, and he mentioned that if he gets assigned on a put, he'll immediately convert to a synthetic, and then he was going to put a 20% floor. And then it just like ding, ding, ding. All right, that's really kind of what I would like to look into, is like creating these trades, but don't have, when you buy those long puts, you have quite a bit of cash invested, even not puts, calls. When you buy those long calls, you have quite a bit of assets and cash invested in those. And then you start producing income, but your floor to that is all of that asset that you invested. There's not a protection there. So it just kind of evolved. I said, he's doing it, and I started doing it. And then it's really sort of developed over the last few months of being the basis of the foundation of my strategy.
So it's fresh, we'll say. It's a fresh idea, because when you unfortunately, yeah, like you said, I'm a little stubborn. I don't really listen to people, when they're saying to try this, try that. I'm like, okay, whatever. But and then I saw the buy put. I'm like, wait a second. And then I don't know, it just clinged to me, and I thought it was just a great idea. But it
probably spoke to the degenerate in you.
Yeah,
because it is the way to create your own leveraged fund. It's a leverage producer, really, is what it is.
Yeah, and I've been trading the wheel on leverage products, so obviously, I know how that goes. And now, to me, this is a way I'm still doing leverage, but it's just a different way of doing it. But I wanted to get a conservative opinion on RoD, because I believe MCheese has kind of joined the RoD. He even labeled it RoD on his platform. But what are your thoughts on this type of trade? And do you think it's missing anything, or?
Yeah, I mean, I like it a lot, actually. I did learn a little bit of that from Tom King. He did. That's one of the first places I saw it at, is on his channel with the synthetic at the money and then buy the put. So, and the thing I like about it is you can pretty much get similar delta as you would as if you were just buying an in the money call, because the at the money, that's 100 delta, because it's basically like having stock. And then if you go down, roughly 20%, like we've been talking a lot about, a lot of times that'll put you down around a 20 delta, 16 delta, somewhere around there. So you get pretty much the same amount of delta as if you buy an 80 to 90 delta call. So similar setup. I think it does take a little less money to do it. And just that buy put is what defines the risk. So you can't go any lower than that. You can't lose any extra. So I think that's what a lot of people would like about the strategy. And, it helps you as well. If you're trying to do these index plays like you're trying to do with QQQ right there, that buy put also just makes you use a lot less buying power. So you can size it, depending on what size portfolio you have, you can use whatever, far down you want on that bought put part. So, but I do like the short-term income that you get, weekly, bi-weekly. You can set that up as however far out as you want. And I do tend to go out a little further on these as well. It makes that a little more expensive, but at the same time, you have more time for the stock to drift up eventually, which is kind of what you want in this strategy. You don't really want those 30-40% drops, like you have on ELF. So, but there's nothing you can't fight back from as long as you have that time on your side. So that's a big key factor for me, is going out about a year, at least 9 months on these, I'd say.
Yeah, for sure. Speaking of ELF, Coffae, I believe when it comes to these trades, when you do them, you like to keep the buy put much closer than 20%. Is that correct?
Yes, it utilizes less capital overall. And as my dad mentioned, I'm young, and so my account size reflects that for sure. And so I normally go one strike below wherever I set up my synthetic, which I'll normally set that up right at the money. It costs more than if you go do more 20% below, which is what y'all often do. But it overall is less risk. It costs more, but it's less capital put on hold than if you have a collar that's lower.
Yeah, because I guess when you go that close, well, let's just think about it. If you sell a put and buy a put for the same strike, right? You're basically doing nothing essentially, right? And your expense is the buy call. But when you do one strike down, you're basically, I guess, you're just taking a little discount, right? You're offsetting the expense on the long call with a little downside risk, adding a little downside risk. I guess that's how I look at that. And then the further down your buy put goes, obviously you increase your downside risk, but you're offsetting the expense of the long call more so, right? And I guess it's a math equation in the end, right? What's the best fit for you? What's the best? I mean, obviously the market makers, we're not going to fool anyone, right? We're going to pick and choose our battles and where we think it fits. And I guess my point is, there is no right or wrong way, right? It's just the matter of what makes us feel better in the end. And like this Q trade here, I want to talk about real quick. I'm not sure who mentioned it, but mentioned the indexes. Let's not do 20%. We should do a closer percentage.
Yeah.
And it really made sense. I don't know if anyone wants to explain why on that. But
I'll jump on it just real quick. I do think there's a better and worse way to where you set the bought put. And I think it's, to me, and Cheese, I'm sure you'll say this much better than I, but I think it's a delta play, and it should be sort of representative, offsetting the IV of what you're trading. And the higher the IV, the lower the delta I've gone, because what that put can do against you is be an anchor if the stock takes an aggressive run up. And it creates an anchor because its delta is higher, so it's going to move more down faster at 10% or 5% than it would at 20%. But on these indexes, the IV is much lower. The moves are smoother over time. So I just didn't feel it was necessary to go 20% on these, because you're not expecting a 10, 15, 20% run up on a week or two in these indexes. So you can handle the higher delta right there. Now, Cheese, you may say that better, but that's my logic and thinking. Whereas if I'm trading an IV that's got 120%, which I need to stop doing, by the way, those are ridiculous. But if I'm trading an IV with 120, I need some room, because it may run up, and then the very thing I'm trying to do, I've cut myself off at the knees on.
Yeah, no, I agree with what you just said there. Yeah, and the other thing too is whenever you bring that buy put up, it costs more money, more extrinsic extrinsic value that you have to pay off as well. So you got to take that a little bit into account. But yeah, just kind of think about what you do when, it's again, a delta thing. So the more you pull that up to, like, say, a 60 delta put versus going down to a 20 delta in the money put, when you sell those short calls, like on a weekly basis, you don't want it to, you'd rather be out of the money a little bit, if you're going to bring that bought put up, if that makes sense. So like, say if you're selling a 30 delta put, you don't really want to have something like a 40 delta, base position, because then once that stock starts running up and that short call turns into like a heavy delta position, you're going to start losing money as it starts going over that strike price. So you'd rather have a heavier delta on the base position versus on the short call. And that was kind of confusing.
It's definitely a limitation of doing a one strike below collar, where if the stock runs up, then your profitability on without the collar, it'd be infinity. It would go up as the stock went up. But if you have that collar so high on it, you'll start to hit diminishing returns, and then you'll start to hit a negative return eventually. So you do have to keep an eye, and you do have to be willing to sell off your position. And if you want to reestablish, you can. That's what I'll often do. But yes, definitely sell a little bit out of the money. And because it is a higher expense. And so if you sell a little bit out of the money and the stock runs up, that'll offset that a little bit, so you don't come out as negative versus if you went in the money. And right. I would say that limitation is less so of a risk on the indexes, because they don't have nearly the volatility that the individual stocks will have. So I think you benefit even more from having that higher collar there. And then with the higher collar, you're using less capital overall, and so you've got a higher return on capital.
Why didn't we have a higher collar on ELF? What happened there?
I did.
Oh, you
did?
Christmas
season, but we can leave ELF and out of the discussion.
That didn't happen, right? It didn't happen.
Yeah, that's one of those things that's just hard to defend. I mean, the only thing you can really do around the only thing you can really do around earnings events is just take your short call that week and in the money as far as you can. Go down to like a 70 or 80 delta if you want to hold a position through it. But one thing you could do is you could always just close it and then reestablish it after earnings if you just want to avoid that risk altogether.
And not to harp on ELF, but I want to, because I think SB closed his long call, right? So I kept mine open.
No,
right?
I didn't actually. I've got
yours is open. Okay.
125.
Okay. The beautiful 125. That is, let me see what it's worth. The last I checked, it was worth 18 cents per share, $18. Awesome, right? So my thought is, instead of making $18, I could probably make $20 a week, right? Sell on a weekly, 0.1 delta. What are your guys' thoughts on that? Is that a good move, or I might as well use it, right?
I mean, that's one way to do it, but I know you probably will have to come out of money or come out of pocket a little bit more on buying power, right? If you're selling that far below your cost basis. I don't know if you looked at that part.
That's true.
That's something that we've been talking about, where as on ELF, it's run down so much. If your basis is at 125 and you start selling at the money at 70, if you have these synthetic with a collar position, technically what will happen there is,
creating a spread.
Yeah, you're creating a call spread. And so the difference between your position at 125 and if you sell at the 170, you've got to have that position and buying power where that cash will be put on hold there. Something we've been talking about is reestablishing the position. If you're going to stay in the stock, reestablishing at the current market value, if there's a huge drop, it increases your max loss slightly, but it negates that spread issue with having that capital on hold.
And the diagonal, that's the reason I use the diagonal. And I have diagonals on those. So it reduces the capital on hold required with that second bought call, excuse me.
So you're doing the diagonal when you sell calls against the 125.
Yeah, so I'm trying to get fairly close to the money. Say if it's 70, 71, I think I've sold those at maybe 75. But then I'm buying that diagonal out a couple weeks at maybe say 82 to 85, somewhere in there. I'm trying to take my rule of thumb on that kind of is take about 50% of the premium I can get from that sold call to use to buy the other call. And that's just kind of what I don't know if that's smart or dumb or whatever, but that's kind of what I've been doing.
Yeah. And I started that too, but then I don't know. It's like, do you do that or you do just sell a call way out of the money? Like I did like an $80 strike. Again, it was like a 0.09 delta. I don't know. And
I mean, there's many ways to do it. Yeah. I like to do the out of the money far, kind of like what you're doing. But yeah, it's when it starts getting that far below, and you do want to stay in it, you can even add to it if you like. But I don't really like doing way below basis unless I have more than one synthetic. Like say if I have 2 or 3 or 4, I'll maybe go below and sell like say 1 or 2 calls. It's pretty much a ratio of whatever you have. And then if those calls get challenged, you can always add to that. So because you always have 2 more in your back pocket basically to sell. So you can roll the call up that's being challenged and you can add another call to help pay for that cost, rolling up. So that's one way you can do it too. But yeah, I just wouldn't want to go that far below basis if at all possible.
And Cheese, what do you think about this? I think at the end of the day, we all have to constantly be evaluating the asset allocation to these. And if ELF is just a loser, sometimes you just got to take the loss and move on to another one. Like, and if ELF planes here and stays here much longer, that's probably what I'm going to do. I'm just going to realize the loss and move that whatever assets I have left in that or buying power in that into another trade that I feel better about.
That's what I really like to do. And I even do that with, let's just say if I sell a put on a stock, I'll even do that as well. Like say if I'm getting way deep in the money and I really don't want the stock, because I know when you sell a put, you want the stock at first, but sometimes that changes. The market can change. Your outlook on that stock may change. So sometimes I'll just take that money, the buying power that I'm using, and I'll go to another stock that's in an uptrend. So it's kind of like just a buying power swap, if you want to think of it that way. Just choose a better underlying and make your money back in a different area.
SB, why not take that buying power, go to Walmart and buy some ELF products and help the earnings per share in the next earnings?
Well, Rod, I thought I had you convinced that if you made enough off ELF, you would do that very thing and show us one day, but you didn't go for that. And,
you got me asking. I'm asking all these people, like, have you ever heard of ELF?
Danger.
Yeah. I'm asking like everyone, have you heard of ELF? Is this good product?
You need to just walk into Walmart and do some product research.
I've known about ELF for years. I've used their products. So whenever I think SV originally brought them up as a company to trade, and I felt very comfortable with that.
And it also sounded good as diversification. I mean, we're in all this tech stuff and super leverage DGN there, Rod. And why not pick up some Walmart makeup? I mean, hey.
Exactly. Everyone's broke. The makeup's cheap and it's not bad from what I hear. Seemed like a win-win until earnings came out. They made a comment about, I guess, their forecast, but
Rod, I see people in the chat talking about what language we're talking.
I know. We got to lower. We got to keep the language, I guess, more within reason. But before, I want to jump to think or swim actually. But before we get to that, I want to talk about the definitions here. So in my eyes, the buy call is the synthetic, right? Then I know the buy call and the sell put is the synthetic combo because that's what Jay always called it. And then when you add the buy put, are we calling this a synthetic combo collar, a synthetic collar? Like, what is this called?
Yeah, I think the buy call and the sell put, that creates the synthetic position. And then whenever you buy a put, that's the collar. And then that sell call will be the short-term weekly calls that you sell.
But isn't the buy call itself a synthetic position? You don't need the sell put.
Correct. I mean, It could be, yes, it could be. But if you're analyzing the whole strategy and you're saying, hey, I'm going to use this strategy, those two are a pair and they create the one delta. So you could just buy a call and then just do a traditional poor man cover call, sure. Okay. But in this strategy, you're creating both of those together are a pair in my mind.
So if we call this something outside of RoD, what the hell do you call this?
I call it a synthetic caller. Is what I do.
Well, well, with the sell call though.
With the sell call, yeah. If you don't have the sell call, then it's not really a collar, I guess, at that point.
So it's a synthetic collar with a sell call.
To me, this is really this is semantics over just a traditional options wheel. To me, it's just a fancy version of that. It's the buy call sell put. That's like you own 100 shares and then and then you just sell a weekly call on it the same way you would have with the traditional wheel. And that buy put, it serves its purpose with limiting the amount of capital that's put on hold, but it also adds a ton more protection.
Hey RoD, I was going to say that you pulled this comment up here, and I'm sorry if I'm talking too much, guys. Just tell me. But again, this is one strategy. Cheese has been very brilliant to remind us over and over again. There are many, and I use many. I don't know if I use as many as he does, but there are future strategies. There are spreads. There are diagonal spreads. There are butterflies, broken wing butter. There's a bunch of different things that you can do. But if you want to learn how to do this, reach out to me in Discord. I don't mind showing you. And then I'm going to count on you that you're doing the research and putting the time in and position size and correctly. I'd be happy to do that. I really like the idea of people in general understanding what they're doing and making their own decisions. Just as a person, I think that's rewarding for me to see that. So I'm in RoD's Discord often, probably talk too much in there, but I'd be happy to help anybody understand the basics of this. And once you kind of get it and do it a few times, it's really not that complicated. It looks like it, but it's not, I promise.
Mm-hmm.
I'll say this too. It can be intimidating to look at. Also, just the options world in general. There are 8 different words that are synonyms, and people will spit them back and forth in jargon, and you'll think everything. So you're in over your head, and it's really just you just take it one bite at a time. And if somebody's using words you don't know, then you go and you research. Oh, okay, so this means that, and just slowly build on it, and you're not going to get everything in the first go. I don't know a ton of stuff still, or have to slow down and really think it through. It doesn't come like that.
Yeah, and you said in the beginning too, it's really just about getting in there and doing it. And that's how I learned.
Definitely.
Like the very first trade I did was a credit spread on SPY. That's how I started out 10 or 11 years ago. So, and you just risk what you can, risks, as small as possible. You can start in something like, TSLL is, one of RoD's favorites, and it's a low price stock. So even if it goes to zero, you only lose a couple of grand at the very most. But you wouldn't let it go to zero. You could cut that off if you want. You can even get out of the whole position if you see it going way far against you. So, and that's what I like to do too, is just have a stopping point in place, before you even get into a trade. And I don't know if you want to talk about that, RoD, about, the moving average strategy type things that I talk about a lot. So
yeah, I want to pull up Thinkorswim because I know we don't have that much time, but I just want to mention real quick to Chew Dog. He mentions you have to be approved for more advanced strategies. I just want everyone to let everyone know, yes, this is more, I'll say, advanced. Do not be trying this as your first option, right? Look into, the very first levels, or like MCheese said, paper trading first, or just learning from listening, right? This is a little, advanced strategy. Again, I didn't touch this for years until I even thought I could, right? And then even then it was scary, and it's still scary. But don't rush anything, right? Don't apply for the highest level just to do something. Just, take it slow, right? And then you don't worry, you'll lose money at your own rate. And And that's how I learn. That's, to me, that's the best way to learn, is losing my money. It's a tough way to learn, but it's what's needed, at least for me. I can't do the paper money. I always say that. I'm not playing poker for free. I'm not joining a fantasy football league for free. You know what I mean? I have to use money, or else I'm not going to care.
The same.
Let me add one quick point while you're pulling it up.
Yep.
Go into this with the mindset, and Rod, I know you're a baseball guy. You're trying to hit a bunch of singles. This strategy, you are not swinging for the fences on here. This is not going to make you rich. This is churning out good income. So think, singles, just good, safe base hits.
Good point. Yeah, because again, this is really mostly, it's an income strategy per se. A lot of what I do is income, right? I'm not, the home runs, you're buying leaps, you're taking the gamble, right? That's not for me. That's for some people, but I'm not a stock picker. I never will be. But yeah, we're getting singles every week, hopefully, and sometimes a double. Sometimes we strike out. We'll get there. All right. Thinkorswim. This is the platform, everyone, for who's watching, maybe not familiar with it. Real quick, MCheese or whoever, I guess. I think we all use it. What's a helpful tool that people may not know about when going into Thinkorswim?
Well, SB, do you want to start on that part? I mean, I know you use it a lot more than I do. I mainly use this for charting, and if you look at the top up there where the tabs are, I use the scan tab and the charts. So you can build a simple.
Let's start with the scan. Yeah, I've never used it, so I'm clueless right now.
Never used. Okay. So, yeah, you see a couple of the filters it already gives you up there at the very top. A lot of times I'll just take that out, and I can look at mine as well, see what I have. But if you want to just start at the top, you can click up there and you can filter for the size stock that you like. So where it says net change, over there to the left at the top, you can just go to stock last. So go down, scroll up a little bit to last, and that's how you can. There you go. Now you can sort by the size of the stock, the price of the stock that you want to trade. So you can set it up to say $5 to 100. Let's just call it. Okay.
Get rid of the other filter, these other ones, or keep them?
Yeah, you can get rid of that one if you like. I'll actually add. You can add one back. Go to add filter, stock. Now I know we like to look at a lot of things with volatility. So one thing I put on mine is, go down to vol index all the way at the bottom. And you can put in some minimum IV. So you can put in 50% if you like as a minimum, or 30%, however you like to start. And that'll give you some filters there.
All right, so the minimum.
You can use the slider.
Well,
actually, I don't even think it goes by 0.3. It might just go by 5 or 30. Maybe try 30. Hit scan right now just to see if that makes it any. There we go. So 30% is your starting point as far as IV levels. Okay, so
this is just like a screener.
Yeah, very basic screener. You can do the same thing on a lot of the free screeners online. I mean, I know a lot of people may be familiar with FinViz. So they have.
So a lot of people will ask, what stocks are on sale? I know that's hard to answer, but what would you use on here to add filter for that, maybe?
Well, a lot of times I'll use the moving averages as a filter. So, or you can use RSI. That would be another thing.
Can you add that here?
I believe you can. I'd have to fumble around and find that one. It might be on the studies. So if you exit out of that and go to edit, add filter again. We might be getting too in the weeds here, but go down to study. There you go. And there might be one for RSI in there, or go to custom. Go down the very bottom to custom. hit delete that one that's there. And say add condition. Study, I believe. Now type in RSI or look for it there.
Rocket RSI.
I'm not even sure what that is.
Oh, there it is. RSI.
Here we go. Okay, so now you can put in, just leave that as default, the 14, 70, 30.
Yeah.
So you could say RSI is less than, in that middle filter, is less than. So a typical one people will say is 30 is oversold. So you can say value. Say put in 30 there.
Yeah, so all this is like a lot for people, right?
Yeah, that's what I was saying. It can get a little heavy.
Okay,
but you can set up very basic things. You can
you can save, like once you do this, you can save your
right.
Okay.
Yes.
All right. So
have you ever done this, SB? Do you ever use
so I'm like in the Thinkorswim web, and mine is set up that when I go on trade and I put a ticker in and I look at chart, those things, the things that I want to look at are boom, they're right there. I don't have to search for them. I've got the moving averages, I got the Bollinger Bands, I've got RSI, and then I've got MACD below it, and it's just right there. And that's the good thing about it. Once you do it and get it set up one time, you can come back to it over and over and over quickly. You don't have to do all that. It's just ready to roll.
Right. And a lot of times I'll use the same universe of stocks. So I maybe have like 30 to 50 that I just have in a list. And what you can do is you can scan inside of just that certain list. So you're not scanning, all 5,000 stocks that are out there in the universe. You can just scan only in your watch list if you like, and then wait for those certain setups to happen. So the scanner will pick up, things that you already trade and are familiar with. And that's the way I like to do it. I don't like to sit there and just find a lot of new stocks. I like to focus on the same ones over and over, the ones I know are quality, companies that make money, things that aren't, super high IV. That's why I do like to have that filter, because it'll filter out some of the, premium chasing kind of stocks. I don't like to really do those personally.
Yeah. All right. Now, so that's the scan, and I wanted to leave a few minutes for the charting. I will be bugging you about the scan later on today, but so I mean, I did not remove my. Right now, I have simple moving averages up. I think this is the 200. I thought I had 4. I don't know where the other one went. So the 200 and the 50, and then I don't know what this one is. Might be the 20, but
maybe the 20.
So I know we don't have a lot of time, but as far as charting goes, to keep it very simple for someone who just wants a basic understanding, like where do they even begin? Like, is simple moving average or any moving average, is what's good to use? Is it good to always use the moving averages?
Yeah, I prefer, like, say on the shorter moving averages, like the 20 or like a 10 moving average. A lot of times I'll use the exponential moving average. So and what that is, the only difference is they just move a lot faster. They weight the most recent price action a lot more than a simple moving average. So, which in layman's terms, it just means it reacts a lot faster. So you'll notice the slope of the 20 EMA or the 10 EMA, it'll start changing a lot faster if you use a exponential moving average. So I like to use those two shorter term ones, or actually an 8 is what I use, but a lot of people use 10. But I'll use the slope of that, and also if the 8 is above the 20, that'll be like a momentum indicator. So you don't even need to technically have RSI or MACD. I do like to have those on my chart as well, but you can even just simply look at the moving averages and tell, are we in a short-term uptrend or a short-term downtrend? And I'll use those shorter ones to basically use levels where I like to sell shorter-term options. So if I wanted to do like a short-term wheel, selling some puts, I'll try to keep my put strikes below that 20 EMA if at all possible. Preferably closer down to that 50 level is where I like to start. Okay. The same thing goes with selling calls. I'd like to keep my short calls. Say if it's in a downtrend, if the 8 EMA is below the 20 EMA, a lot of times I'll put my short call around either one of those two moving averages, and it just it gives you a point to put your levels. If you don't really know where to put a level, just move them, use those averages as your levels. If that makes sense.
This. I found an old video of Tom King's where he did a chart layout on Thinkorswim, and he mentions these as well as adding a few others, and gives a tutorial on how to add it in Thinkorswim. And I have started off as a monkey see, monkey do, added those and built off of there, trying to learn about each of the metrics to analyze on the charts.
Mm-hmm. Yeah, he's got some very in-depth charting. So if you want to learn about that, you can go in there. He also puts on ATR levels, which is average true range. So he does a lot of selling strangles. So he likes to use I think it's a 3 ATR band. And it's kind of similar to a Bollinger Band. So it just tells you how far away, from the moving average you are. So he'll look at it on a weekly chart, and I believe he likes to get his strikes around that 3 ATR band, if at all possible, to create a solid range.
All right. Now you're talking calculus. Cheese.
Yeah, I know. So, but yeah, back to the moving averages, I would say the 20 and the 10 is probably a good short-term one to have. And then like you have on there, also use the 50 and the 200. And that'll be more of your long-term or medium-term moving averages you want to pay attention to. Also on mine, I do like to have 100 on there. And the reason why is that it kind of correlates to a 20 moving average on a weekly chart. So it's always good, when you're selling options or trying to pick a direction in general. I like to take the weekly time frame into account as well, just to kind of give you that bias. So the 50 and the 100 EMA are kind of similar to a 10 EMA and a 20 EMA on a weekly chart.
Okay.
If you see those stacked positively together, that's a good general uptrend.
It's a lot of MAs there.
It is.
So I know this hour, it went by pretty quick. So I'm going to ask maybe early next year that all three of you come back if you guys want, because sure. I don't think we even got nearly as far as we wanted to, right?
Right.
And that's up to you guys. Obviously, we could talk about it after, but I do want to start to close it out. And obviously I know Coffee's got to go to work. I got to go to work. Mm-hmm. I'm pretty sure. I don't know if you guys work. Well, SB works.
I work from home, so it's a little easier.
Okay. All right. So I know, like I said, I hope to have you guys on again someday, and I know you guys are always available in the options trading Discord, the channel of my Discord, and I appreciate that, or Max's. Shout out to Max Convexity. So any final words that you just want to give people who, a lot of this, I'll say towards the end, was definitely intimidating stuff for sure. I'm intimidated and I feel like I kind of know what you're saying, but any final words to the options community or the future options traders out there that you want to just, give to them?
Yeah, I'll say just real quickly, like you can get as deep in this as you'd like, and you can really, really like use copious amounts of data. I don't. I use some basic standards foundation, but I will say that listen to Cheese. He knows what he's doing. Picking the stocks is probably the most important step of all of this. Picking a good stock or index sets the foundation. And then I would say to all the high yield owners, and again, I've owned quite a bit of varying high yields, and they're not all evil or bad. Just be aware of what you're doing. And if let's just say you're a brokerage that has the initials of YM, and I'm not going to say which one, but we'll just call them their initials. And you've got 12 billion assets under management, and you're charging a 1.3% fee. You're making $156 million a year as a company. And daily, you're slicing that off on a daily piece at 427,000 a day, and they're pulling that out of your money, whether they're profitable or not. They're going to be profitable, whether their trading works or not. So if you want to invest in MSTR or coin or whatever that stock out there is, because when you invest in one of those, you're investing in the underlying. You know, you might can do it yourself and not pay a fee. And you can decide how much risk you want to take. You can decide how far out you'd like to go. You can take those steps, and you don't have to be a genius, but you learn one step at a time. And that's what I would say. And reach out to people who have experience in the Discords around. There's so many nice people that will share with you, that have shared with me and continue to do so. That's my word. I know I talk a long time, but you can do this. You can be in charge of your own money and your own future. You can determine what you want to do with it, and you don't have to pay somebody to do that.
Yeah, it's hard to add a whole lot to that, but yeah, I would say something similar. You can do this yourself if you really want. I know a lot of people like to just have, the easy button and just have the money coming into their account, but this really doesn't take a lot of time once you get used to doing it. And I would just say start small is kind of the way to do it. If you have to do the paper trading, I think that's the easiest. That way you're just not so overwhelmed if you're losing money and you don't know exactly what you're doing. But just start on a small stock, start with a small basic strategy, sell a put to begin with. The worst that happens is you buy the stock at that put strike. So, and just keep going and keep learning and come in the Discord. I think that's where one of the best places you can learn, because on a video, it's hard to really ask a question, to whoever's doing the presenting. But if you go into Discord, you can ask as many questions as you want, so that's what I would say.
I guess I would say to get into this all sounds intimidating and it's a ton of information. I would say go to YouTube, learn what a call, what a put are. Then I'd go back to RoD's old option strategy wheel series and just see how it works there. And then start trading with just one small stock. Just create your own wheel. Start with buying the put, and then if you get assigned, sell the call. Sell the put, yes. But I would say start there, track it, and then build from there into, if you're interested in this, instead of actually owning shares, what's a synthetic and a caller, and go from there, but work your way into it.
I guess I got to send SB daughter a check in the mail too. Give me a shout out there. But no, I appreciate it. I assume you're talking about the whiteboard video, right? Is that or no?
That's a good video, but your old series where you just went weekly with TSLL and Clean Spark, and about a year back or so. Okay,
cool. All right, no, thank you, all three of you. Hang on when we close too. I just want to obviously say goodbye, but as we get to the end, I'll let we'll let the lady think of the keyword, but let me do some closeout comments in the meantime. As always, this is not financial advice. I am not a financial advisor. SB is not a financial advisor. Coffae is a CPA, but not a financial advisor. MCheese
professionally here.
MCheese is not a financial advisor. And this video was for fun and entertainment. So hopefully you had fun. Hopefully you're entertained. If not, oh well, right? Maybe next time. But we shall see. If you guys enjoy this content, obviously hit the like button, and make sure if you're in the Discord to go in and thank them for their time today. Because they got up at the crack of dawn to join us. Maybe we'll do it again, maybe not, maybe it's a one-time thing, but at least thank them for their time. And then obviously you can ask them a million questions after that, because they are very helpful. That being said, since we're at the end of the video, I just wanted to say thank you again to all three of you, but we got to get to the key word. So if you made it this far in the video and you want to prove it, you gotta say Coffee's keyword.
I don't have a word, but I've got a phrase.
You got a phrase? All right, let's hear it.
One step at a time.
There we go. All right, so if you made it this far in the video and you want to prove it, the key phrase today is one step at a time per Coffae. I just want to thank all three of you again. Again for getting up, joining me. Hopefully, again, obviously we'll chat. Well, we chat every day for the most part, but I appreciate it. Hopefully, you guys.
Hey guys, thankful for everything. Appreciate this community. It's Thanksgiving. I have so much to be thankful for. I thank the good Lord for all the blessings in each one of you. I hope you have a great week.
Thank you.
Well said. But like I said, if you guys can hang on, I'm going to end it here. Thank you all for joining the live and anyone who's watching after the fact. I appreciate it. Have a good one. Happy Monday. Happy Thanksgiving. Later.